What's up, Outliers? Quick market update. We're taking a look at GameStop today for your weekly fix. We're going to run through quick stock analysis. We're going to talk about what we covered on the live stream last Saturday. For anybody unable to make it, give you a quick recap there. We'll take a look at the options chain, and then I'll give you a couple updates on the covered strangle that I personally am running in GameStop, so you can see some different ways to approach it. So what's the latest? Well, ever since we had this big, massive down day, 10% in a day, that was completely nondescript, not tied to any sort of news. Interesting. The stock continued down for a few days post that. And then since this term low here that did dip below 26.5, it's now started consolidating and trending sideways. So we did get a lower local high. So this does confirm a downtrend. And this now is all eyes on how we behave here. There's two dominant ways it can go. And again, you can see I didn't draw any of these lines today. These lines have been here for a little while, actually drawn off this originally. And we can see either it might decide to consolidate sideways for a little bit, hovering around this 26.5 handle, which I do think is fairly likely. We can see that there's a really big volume node here. And we can also see that this has been defined as support for a little while now, this 26.5 handle. It's essentially all these transactions there. So it did break out of this descending channel. Now the question is, does this new breakout day start showing appreciation and challenging this lower local high, which would then signal a short-term trend reversal? Or does this move sideways, consolidate purely, or does this actually begin a downward move here? Now, from my best analysis, which again, I'll always throw the caveat, GameStop is very unique in the way that technical analysis applies to it, in that it generally doesn't. Well, that's actually a lie. It generally does, but a lot of the important times it doesn't. So with that caveat aside, this, I think, would be more likely to either consolidate sideways or consolidate and start to show some sort of trend reversal. Whether the trend reversal to the upside happens after today, tomorrow, next couple days, it's hard to say. It really depends on where order flow comes in. But the fact that it punched below this 26.5 here, it got close to it here, and it kind of just was navigating above it. That kind of shows us that the general accepted value for GameStop right now, even from a short-term sentiment perspective, is above the 26.5 handle. So of those three courses of action, I would presume the least likely would be a significant drop below the 26.5. And assumption of this downtrend could happen. Don't know, but I personally think that's lower likelihood. And then higher likelihood, sideways consolidation, followed by some sort of new approach to these local highs to see if price will recapture those. The way I look at this is there was no real material change anywhere in here. And yet there was a lot of people willing to transact at these levels. So with no true fundamental change in the company, I don't see why people wouldn't be willing to transact at these levels still. Now, another random piece of information that I came across from the Discord, actually, just want to give credit to where I saw it, from TCM King. So shout out to TCM King from the Discord, but he was essentially saying that Ryan Cohen just moved all of his shares out of RC Ventures into his personal name. And if I'm not mistaken, I actually think his personal entity is outside the country, which I find that just very interesting. I actually put an ask out on X to see if we know why this might be. It looks like the entity is in Canada, if I'm not mistaken. So I honestly don't know what to make of that. I'm very eager to see what people think of it. Genuinely don't know. I'm trying to understand what the potential pros and cons could be of making this kind of move. There's lots of ideas I have, but the ideas that I have don't really matter. What matters is what I know and can prove. And unfortunately, right now, there isn't much that I can prove with respect to why he might do this. So my guess is we'll have a little bit more clarity about this throughout the week. It's definitely something I'm going to look at, and this is definitely something we'll look at on the Saturday stream, but just in case you didn't know. Now, speaking of the Saturday stream, we had a really, really fun series of conversations. We spent a while talking about this AMA with Lucy Commissar. Had a chance to learn a little bit about her. I actually reached out to her. And she's a journalist that deals a lot with offshore entities. And she started tying some really interesting trends between offshore entities, FTDs, and naked shorting, which then led us to find this video, which is called the Wall Street Conspiracy Movie, which we're going to continue next weekend. We spent a while just kind of poking through this, maybe almost 15, 20 minutes. And there's a lot of really interesting details in here. And there's also Susan Trimbath, who I've reached out to as well. I'm hoping to do a podcast episode with her to just explore this whole thing a little bit more. Man, look at that. Real thoughtful, very pensive. But that's you kind of need to pay attention when you're looking at this stuff, because the rabbit hole goes deep real fast, and I ain't that smart. So we need all brain power applied, as you could tell is happening right here. So really interesting learning about more of the naked shorting, the offshore component to it, and the fact that this thing has been going on now for over 20 years. And this same damn conversation continues to be brought up. It's actually a little disheartening, but change can sometimes take a long time, longer than we might like. So the fact that there are still people actively fighting against this, Dave Lauer from Irvin Finance, they just launched a lawsuit to start to try to highlight just more of this bullshit. So it's a long fight. Got to keep on it. That's all there is to it. Got to keep the pressure. The thing that ends up happening is people try to apply pressure. They don't see the results that they want fast enough, and then they fall off. That can't happen, because then it continues to happen, unfortunately. So let's take a peek over now at GameStop options and see if anything sticks out to us specifically. Big expansion, actually, in call open interest. This was in the 500,000s before. Not big move on the put side. I mean, this is what I find interesting. We are hovering at some of the highest call open interest skew that we've seen historically. It's over 3 times the calls to puts, but I'm not seeing any sort of significant series of transactions that indicate something's going on the back end. And that's both good and bad. It means in the short term right now, it doesn't look like people are positioning for some sort of anticipatory squeeze, but it does look like people are trying to play this thing fairly directionally. Now you can see the volume today is huge, 90,000 calls against 1650 puts, but the vast majority of those are being sold. My expectation for those is people trading covered calls. I have those out right now, and there's a benefit to trading stuff like that when the market is going through these kinds of down moves, because the move that you saw in GameStop, this isn't novel, right? This has been going on for several weeks now, where it's starting to contract down, and it offers an opportunity at least to take in some premium from a short call perspective, make a little bit of money again, and then you can choose to do with that, whether it be buy more GameStop shares at a lower price as it's going down, so on and so forth. There's a lot of opportunities there. So the main takeaway from an open interest perspective is really big call skew, but I'm not seeing insane call volume, meaning in terms of size and overall net premium. The other thing is, if we take a look at expiration cycles, it is all over the place. This is anomalous compared to what we often see in GameStop, where we see concentration, heavy concentration in singular expirations, typically the front expirations. So if we take a look, there's 643,000 calls. If we take a look at the 31 Jan, there's 160K in the front expiration, which is a lot, to be very clear. But for GameStop, that's not the majority of this options chain, which is interesting. There's positioning out in 21 Feb. There's light positioning in 21 March. 17 April's heavier. 20 June is heavier. So these two combined are playing longer term ideas. That's why they're that far out. Really light 18 July, that's common. And then 16 Jan is pretty heavy. And 15 Jan 27 is light, and I would expect this one to stay light. I would expect this one to continue to build out for those longer term ideas. What I'm highlighting is that in terms of volatility dispersion, it's across the expirations, which again, that tells us that people are playing a lot of different ideas. It's not all crowded front expiration, people expecting some really strong short-term movement. If we take a look at volatility across the term structure, we can see near-term vol is actually starting to jack up a little bit, which is interesting. And we can see earnings right now is shown on the platform at the 25th of March after the close. And if we take a look out here, market doesn't look like it's buying it, because we can see it's 78% vol here, only 80.76% vol here. I would expect the expiration cycle to contain this earnings release, which would be this 17 April. I would expect this to be higher, but what will end up happening is as we get closer, weeklies will be added. So you'll see actually weeklies around this that will probably pop up in vol pretty significantly. All right. Last thing I want to show you, quick update on the covered strangle that we have built. And this is currently what it's looking like. So we still have the same $25,000 original allocation. Right now we're using 18,000 of that. So about 73% utilized. We have the same options out. There's essentially been no change over the last time you've seen this. I know that's not sexy. That's not super fun. There's not a lot to dive into, but this is what trading is. Sometimes it's a lot of putting stuff on and then just kind of letting it go. Now, one admin note is this position is coming up on time on needing to be managed. And we can see that I have the 25s, which are still out of the money, even though it's at 27.5 and it's been contracting. So these have gotten slightly more expensive, but volatility and time will continue to decay out of those. So this is a little bit of a waiting game on the put side. On the call side, it's just hanging out. These will come down soon enough, though, because they're showing a pretty decent profit. And now the main question is, when do we add more shares? And it looks like it's coming up on time. So what I do now is I set different alerts on where I might want to start nibbling with shares to start using some more of the overall utilization based on where the perceived floor is right now, which is, again, about 26.5. So with that as the case, if it starts to channel in here sideways, or if it starts to appreciate in here over the next day or two, then we will look to add some more shares. Right now, it's just a little too early. These 3 days bode well. So we're coming up on the decision point again, probably tomorrow or the next day. We're right on top of when I would want to see if this is looking like it's going to fall through down further, to which I would wait until it consolidates. But right now it is consolidating. So again, probably tomorrow or the next day, the decision will be made on adding some more shares. If I do add some more shares, it'll be a relatively light allocation. And that's simply because we are running out of capital. Right now, we only have, a little over 25% of the capital remaining. And I definitely don't want to go over 85% utilized. That's just in case there's some sort of really big down move, maybe 90%, maybe 9%. We'll give it 90%. But for this kind of strategy, it's really important to keep some cash on the side to be able to add to things if puts get stuck and we need to add some size and stuff like that. So leaving about actually looking at the size of the underlying 10K is about right to leave. That'll allow me to add a few lots if I need to, not really expecting to have to do a whole bunch of that, but that's more just from options management perspective. So as always, let me know if there's any questions, anything I should look at. Be an outlier. I'll see y'all later.